My name's Hannah, Today Reporter. A rumor that made the rounds in Asia on Monday suggested, according to media reports, that the Chinese government could be planning to buy the raw material in large quantities and store it for the state. This led to speculations that nickel could become scarce overall. Prices on the Shanghai Future Exchange reacted strongly to the rumors and jumped by more than 6.5% in Monday's trading and closed well up. It remains to be seen whether the rumors of the government stockpiles in China are actually true. Overall, the base metals have shown an upward trend in recent days. Not only nickel but also copper, aluminum, and zinc have recorded significant gains. The important economic indicator copper, for example, has clearly approached the $10,000 per metric ton mark. However, the price of tin has risen particularly sharply by almost 30% since the end of March 2024. According to a recent analysis by Deutsche Bank, good early economic indicators for industrial metals from the United States and China are proving to be positive and robust. The recent increase in demand for aluminum, nickel, and copper, for example, but also the shortage of supply, as can be seen from the 17-year low Indonesian tin exports, further support this analysis in our view. The energy sector in Western industrialized nations in particular is likely to continue to provide significant impetus in the medium term. The United States alone will have to compensate for rising energy demand of more than 200 terawatt-hour in the coming years. Last week, LME nickel prices surged above $19,300 per ton, followed by further increases in the Asian market this Monday. This uptrend had a notable impact on Taiwan's stainless steel market, prompting swift reaction due to anticipated May price hikes from steel mills. The rise in base metal prices, particularly nickel, was fueled by typical capital inflows and supply adjustments. Shanghai nickel prices also saw significant gains, closing at over 140,000 CNY per ton, marking a notable increase from the previous week. Despite the sharp increases, Indonesian stainless steel producer Tsingshan did not immediately adjust the prices. However, the Taiwanese market responded by further raising price based on last week's adjustments. Overall, while buyers are stocking up in anticipation of continued price hikes in May, caution prevails due to subdued demand. The UK Trade Remedy Authorities has issued its final recommendation to prolong the UK steel safeguard measure to the Secretary of State for Business and Trade. The recommendation suggests a 2-year extension to shield the nation's steel sector from import surges. The Secretary of State will assess the proposal before announcing a decision. Under WTO regulations, the Department for Business and Trade will open a consultation period, inviting international stakeholders to provide feedback on the TRA's final recommendation. The existing safeguard, encompassing 15 steel categories, faces expiration on June 30, 2024, unless extended. The London Metal Exchange nickel futures price kept soaring and the nickel spot price also hiked, despite the nickel inventory at LME increased by 1,170 tons to 70,928 tons. According to the source, the increase in nickel prices might be caused by the China's purchasing and stockpiling of nickel pig iron. As per the latest report, the economy in China grew by 5.3% in the first quarter of 2024, which was above the previous expectation. The retail sales rose continuously for the 14th month. Online Chinese retail is particularly outstanding at present. Deutsche Bank analysts said the imposing manner picked up at the beginning of this year, which could continue in the coming months. The improvement of global market affection and the push of China's economy are deemed as the main reasons for the price increase. Looking at each part in detail, some media sources indicate that under this situation, real estate still cumbers the general economy, while exports have shown strong recovery power. German ThyssenKrupp Material Services and ThyssenKrupp Steel Europe inked a memorandum of understanding to procure eco-friendly steel, signaling a significant step forward sustainability. The agreement sees ThyssenKrupp Gold, a subsidiary of ThyssenKrupp Material Services, committing to acquiring fixed volumes of carbon dioxide-reduced blue mint steel immediately, with quantities set to escalate gradually until 2030. Not confined to serving its German clients, ThyssenKrupp Gold aimed to extend the availability of this low-carbon emission steel to stock-holding units across the Western and Eastern Europe. EU companies relying on imports of stainless steel cold-rolled flat products from Turkey, Vietnam, and Taiwan will see the hefty EU duties imposed on their consignments. As per latest report, the aim is to address the circumvention happening via those three countries of EU dumping and countervailing duties imposed on import from Indonesia in 2021. EU investigators found that Turkish companies were not involved in circumventing the bloc's dumping duty and terminated the probe, imposing no measures. The proposals were approved earlier this week by EU government, paving for their entry into force in the coming weeks. The EU regulator has until May 11th to formally complete the probes and announce their outcomes. The Israel Ministry of Economy and Industry reviewed plans to restrict scrap metal exports and introduce two quotas for sector exporters. This move responded to a steel and iron shortage worsened by the recent conflict outbreak on October 7, 2023, hindering scrap metal collection crucial for local steel production. The Economy Ministry indicated that the measure was initiated 4 months ago upon appeals from industry leaders. The decision coincided with the Turkey's export limits on Israel previously enacted after the Gaza war. Turkey's embargo covered 54 product categories, including steel and iron. We will be back with the latest updates tomorrow. Thank you for choosing us to stay informed.